All right, the purpose of this video is to talk about the difference between a Roth TSP and traditional TSP. So I get this question all the time from people who want to know which one should they do, right? There's no right or wrong answer to this. So what I'm gonna do is I'm gonna explain how both work, and then you make the decision, or if you want to talk about it on a one-on-one call, we can do that. But here's how they both work, right? And I'm gonna use the metaphor, do you want to pay taxes on the seed or the harvest? Now, with the Roth TSP, I'm gonna start with that one first because it's the one that's the most mysterious and often the one that's asked about the most because it's so new, right? So with the Roth, how the Roth TSP works is like this. When you go to pay for it, you pay for it up front before you pay for it up front, right? You don't take taxes out at the end. So what happens is, let's say you make $120,000, right? When you have the Roth, you still pay taxes on $120,000 worth of income, right now, right? So when you go to the end of the year, you go file your taxes, you don't get a deduction for the amount of money that you pay into the Roth. Now, how does that impact you? When you go to retire though, that money has already been taxed, right? Now, so let's say you have $1 million. I'm speaking life into your TSPs. Let's say you have $1 million in your TSP, right? If the majority of that is Roth, right? Or let's just say all of it's Roth for the purpose of this example. Then when you withdraw, say $200,000 out, you don't have to pay taxes on the money because you already pay taxes on it. Now, when it comes to traditional, and I'm gonna go back and make some adjustments to what I just said to go into some more specifics in a second, right? For those that think, well, that's not totally how it works. I'm gonna go back and fix those things. Now, when it comes to traditional, let's say you go and you put $20,000 a year into your TSP, right? And your salary is $120,000. Now, when you go to file your taxes, you're only going to pay taxes on the $100,000, right? Because you put $20,000 into your TSP, so you got the tax deduction right now, right? So you're paying less money, you're paying less taxes at the end of the year because that $20,000 reduce your taxable income that you put towards your TSP. Does that make sense, right? Now, when it comes to retirement, you got that same $1 million. You go to take that $200,000 out. You got to pay whatever your taxable income is at the time. You got to pay taxes on that money, right? That could be 20%, that could be 22, 25%, whatever your taxable income is at the time. That is what you have to pay taxes on at that point, right? Now, here's some little nuances. With the TSP, any money that's matched, the TSP matches that 5% that they match, that's automatically going to go to traditional, right? So even if you're doing 100% Roth contribution yourself, that 5% TSP matches is going to go into a traditional account. Now, another question I get all the time is this: can you contribute? Well, what's the maximum you can contribute? Because if you're not a federal employee, right, and you have a Roth outside, there's a maximum around $6,500 as of this video of what you could put towards your Roth towards a Roth account outside of the government, right? But with the Roth TSP, that falls under the tax class of a Roth 401k account. You could put the max to what the IRS limits towards retirement accounts. So as of this video, if you're 50 and above, the max you could do in your Roth TSP is $30,000 because the maximum plus catch up. You get what I'm saying? So you could put up to $30,000 into your Roth account just like that. Now again, the 5% you put that they match is going to go to the traditional. But another question is, can you do both at the same time? Yeah, you could do both at the same time. But again, the cap that you could put within both is $30,000. That's both combined, not individually. Both combined is $30,000. How you mix that up, that's on you. But the thing about the Roth, again, is the benefit to the Roth is that the money when you retire, that money is not taxed. The benefit to traditional is you can reduce your taxable income by $30,000, which is a big deal depending on your tax situation, right? So you want to talk to your tax person. If you want to talk to us, we can run your numbers and see what tax brackets you're in and things like that based on your income in the TSP. Now, your stuff you got outside, I can't help you there, but what you got within your TSP and your federal system, that world, I can help you there. But again, I hope this video helps you make that decision between what you want to put between your Roth and your traditional TSP. All right. Peace, blessings. Bye-bye.